Welcome. I am Ernie Goss. I am a research economist here at Creighton University in beautiful downtown Omaha, Nebraska. Here I am to report on the business conditions for the month of October. What do these supply managers, and we survey supply managers in the 9 states stretching from North Dakota and Minnesota in the north to Oklahoma and Arkansas in the south. And we've been doing this since many of you were children. We've been doing it since 1993. We've been reporting on business conditions in the 9 state areas. So and we release on the first business day of every month. Now here we are on November the 3rd. What did and we have a leading economic indicator. That's what the primary outcome from our survey of, again, supply managers. And these are men and women that are at the front end of the economic chain. So when something happens to them today, economically speaking, we see it later on, and that's what we're going to talk about. They're sort of been referred to as the canary in the coal mine, but they are early on. So growth slowed for the month of October. The number did come down fairly dramatically, and I'll give you the actual numbers later on, but hiring was weaker. Of course, that's not good. Hiring was actually, the number broke below 50. Now 50 is growth neutral. 0 to 100, 50 and above, 50 is growth neutral, below 50 is growth negative, above 50 is growth positive. The number broke below 50 on terms of employment. Employment only. Overall index was above growth neutral. But also exports were weaker. Now that's, of course, a stronger dollar, which makes us less competitive abroad. That number came down. And then finally, just agricultural commodity prices weaker. And of course, energy prices. And energy prices matter a lot for North Dakota and of course Oklahoma, 2 of our survey states. Now here you see the chart of the Mid-American Business Conditions Index since for this year. That's 2014, and it's graphed against the U.S. And now, of course, in there I've graphed the U.S. in red, and of course the Mid-American there in blue, Creighton blue that is. And you see it's been headed downward. Of course, the direction there is not good, and the U.S. number that'll come out later on this morning, I expect it to be down as well. So things are slowing down, and we had a great third quarter. Of course, those numbers came out last week. Now, the fourth quarter is not going to be as strong when we get those numbers in the first quarter of 2015. But anyway, so as I said earlier, the leading economic indicator declined, but in the actual number it went from 54.3, which is reasonably good, to 51.8, which is, I'll call that a tepid. How's that? Not, I won't say Goldilocks. Goldilocks meaning not too hot, not too cool. It's a little too cool. The soup's getting a bit too cool, and the economy's getting a bit too cool. That's the growth. New export orders declined from 53.2 to 48.8. Of course, that is not good, and we depend heavily on exports, particularly the agricultural sector, and of course, that's what we're seeing now. We've got to separate here the grain-dependent industries where prices are very weak. That would be corn, soybean, and wheat principally. And then on the beef and pork side there, it's doing better. But overall, you put it all together, the ag sector is bringing down the overall economy, bringing down the growth, I should say. And we're seeing that in the energy sector as well, with oil prices now down to $80 a barrel. It doesn't sound cheap, but that's well down from 111 that we saw earlier. Average wage gain, now what do you think? What do you think would be good? Well, 1.6% is what these men and women reported, these supply managers reported. They expect for the next 12 months, 1.6 is not going to make it when inflation is running above that, only maybe 2%. But it still means your inflation adjusted wages are likely to decline. At least they expect them to decline. Wholesale prices, wholesale price gauge moved from 60.1 to 60.6. That indicates modest inflationary pressures at the wholesale level, and that's what we're seeing. In other words, not a lot of inflationary pressures despite what the Fed has done over the last several years, since 2008 when they launched QE1, of course. And then we look at when you look at it overall, though. So overall, it was a weaker report, but still positive. Wage losses, principally in manufacturing, of course, that's not good, but I think that's going to be reversed in the when we report our results for the month of November on December the 1st, first business day of December. Between now and then, what should you watch for? Of course, always keep an eye on our survey results. I will argue they're a pretty good early indicator of what's going on in the economy. Keep an eye on the Case-Shiller Home Price Index. That number for August was down from July. Now that means prices in these metropolitan areas, 20 of them across the U.S., declined. That's not a good signal. Year over year, still 5% growth, but that's over the past 12 months. That's August to August. Now that's down from 13% that we saw back earlier in the year over year. So it's moving pretty swiftly down. So keep an eye on that. Jobs added November the 7th. That's the first Friday in November. Watch out for that number. I think it's going to be okay, but not as strong as a lot of folks are expecting. A lot of economists and politicians and political leaders, of course, that's after the election, so it's going to be a bit weaker. The number for last month was above 200,000. It's not going to be that strong. Keep an eye on the wage number that comes out of that survey. The wage number is year over year has been 2%. And that's what the Federal Reserve, and that's what we economists, we dig down in that report and look for that wage growth number year over year. It's been about 2%. When that number begins to take off, that's an indicator for you that interest rates are going to be headed higher. Right now it's not taking off, but watch it. Keep an eye on it. The yield on the 10-year Treasury, I know you're getting tired of me talking about that, but it is an important indicator. It's an indicator of inflation. When inflation ticks up, that rate, that yield goes up. It has been low. It moves down when you have risk, higher risk, because individuals globally and in the U.S. sell stocks, buy bonds, pushing the price up, yield comes down. Finally, it's an indicator of how global investors see our bond market. And of course, they've been seeing our bond market is a good place to park their money, which brings down the yield. Now, I know some of you asking, well, I thought our bonds were not that good, not that safe. Well, as I've said before, healthiest horse in the glue factory. In other words, they may not be good, but everybody else's bonds, almost everybody else's bonds are worse. German bonds, of course, they're even lower yields. Some other nations have lower yields, but overall U.S. yields are low, meaning investors like them. What are the risks that you need to watch out for? Housing. Again, housing, that number coming down. Keep an eye on that Case-Shiller Home Price Index. Trade embargoes, very important. We don't want to see that because obviously this part of the country depends heavily on exports, agriculture principally, but also manufactured goods. Europe is slowing down. That is a factor, but it's already in the numbers. It's there. Much stronger U.S. dollar. Very, very important indicator to keep an eye on. When that number bounces up there, and it has been, that pushes agricultural prices down, pushes energy prices, those two down. Of course, that's not all that bad. When we're now looking at gasoline prices, the best we've seen in a couple of years. But keep an eye on that farm income. Obviously, farm income for almost all the 9 states that we survey, very important. Of course, it's headed in the wrong direction unless you look at beef. That's livestock producers, beef and pork. They're doing better. So but overall, when you put it all together, ag is weaker. Probably going to be a down income this year, 10 to 12% from this time last year. But really, the real concern I have is for 2015. So that's it. It was a good report. I'm stretching it a bit. The numbers are moving in the wrong direction, but it wasn't a bad report overall. And I expect they'll level off, plateau here when we report our numbers on December the 1st, first business day of December. Between now and then, thank you. Watch our survey results will come out. I would argue these survey results are something investors should keep their eyes on. They do. But between now and then, may your economic cup runneth over. Thank you for joining us here at Creighton University, the Hyder School College of Business, and Ernie Goss here, economist in the Hyder College of Business. Thank you.